Hello traders, this is Alex with the Commodity Matrix. It's June 15th, Monday at about 6:25 p.m. 2026. This is my X account, CBOTman33 is my handle. I update, try to update, keep all the stuff that we review today, plus anything new, some stocks, stuff like that. So anyway, you can go back and review, hook up my handle, CBOTman33. I'm going to do like I did last video. I'm going to split this up in two chunks. We're going to do the corn to the juice and then crude down to Bitcoin in a separate video. I'll probably cut them here, but that way, if you're not interested in the grains, then you don't, or ag, you don't have to listen to it. I will have a composite, where they do both, so you can kind of search for that. But let's get right into it here. Again, everything's short, man. Got to be a little careful. Nothing's long. Total, now that might be a low, right, if you're contrarian. It doesn't happen that often. Now, unlike the stocks, though, I have no opposites, right? I mean, so anyway, people are selling commods and buying the stocks, but, the stocks slipped a little. So, and Bitcoin has kind of slipped a little, and then now everything's on a potential rebound, and we'll get into that here. Let's go right ahead into the corn. And you can see this chart made a new low like we talked. Oh, it did not make a new low, but it got down there. I kind of like this setup if you're going to buy. I mean, you got a problem is you got a risk down here, probably to 420-ish. I assume it's always going to take that out. Might be a double bottom against the July contract. Again, we're in December. So now we're getting into the weather a little bit. So it's scarier than crap, in my opinion, to be short any grain commodity on its low in particular. Just because, right? I mean, it could all of a sudden be 120 degrees, scorching hot, and kill everything. So it's always best to be safety. Where do you think it's going to go, right? I mean, I just think it's, if it's going to downtrend, it'll downtrend in here, right? Now, again, it was a solar eclipse low right in here, and it was the midpoint, Gann's midpoint, 90 degrees from the solar eclipse, his projection point, and my 66 market day zone, that's what I use, it's called the matrix, but that did project that high, and down we went. So again, it might have to come down here to realistically and maybe trade sideways, and we'll look at that on the bar chart data. Here's the beans, and again, made another new low. Resistance, if you're wanting to be a seller, is not too far up, so not a bad trade, up around 1160, at around 1156-ish. Again, it might go up a notch or two, but if it's really a dog, it's up against these old lows. I got to assume if it's going to be a bad, ugly pig, 1156 on the nub, maybe 1155 and 3/4 might not quite get there if it is truly a full out bear. Now, if you bought this on this dip, which ain't a bad buy, right? I just don't think you can risk much more. At the most, 1105 and 3/4, or buy some $11 puts against it or something and hang on for a bit. Now, July's only have, I don't know, week or so left, and then you got to roll them to August or before deliveries, right? Now, if you don't care about deliveries. Here's the D suite that we're trading. Again, the Gann zone was the high, right in there. Had a kind of a fade close. So again, the stops did get moved down a little bit. At least they're a little more human. I mean, we sold it down here, so we're definitely, it's not a low risk trade, 50 freaking cents, but that's all you can do, right? Now again, I wouldn't trade it like that personally, but again, that's why the mechanical methods like this that I use, or what Gann used, right? He used a 2-day trendline indicator. That's why his trades were always in the hunt. Now again, he would have been looking for a high, I assume, because of the low that we had down here in the solar, right? So Gann would have been out and maybe doubled out, right? But I doubt it. Now again, he would have been trading on some type of number, maybe on the master chart or the square 9, something, right? He could have had some number up here that he got out on, or some stuff that he always put out. Now again, he traded the 2-day trendline indicator though to get him in, and tendency to get him out as well. Here's the meal, just a pooch. I mean, July got up here, so we had a double top in the July contract. I don't know what the DSI was. I guess I don't have it. Just a pooch. Got to assume it's going to go back down to the lows. Now, we didn't make a new high, so it doesn't have to make a new low for Newton's third law, right? For every action is equal but opposite reaction. The equal reaction would be, again, some type of another low right down on it. Here's the cough. Did not make a new low this moon period. Now, this next moon period is very shortened, by the way. This one, June 5th. So it only has till Friday, because June 21st is a Sunday. So it's only 4 days long, so it's really shortened, just so you note that in your memory banks, which makes, again, these last two bars, has a little more data, but it didn't really do much, right? Here's the cotton. Again, we are now short. We did lower the stops from way up here down to here, a little more human. But again, I wouldn't be trading it like that personally. But that's the mechanical method. That's where we put our stop. Um, I think it's going to break back in here, probably whatever 70% is or 65, something down in there. 62 if you want to use 61 point if you're going to use like Fibonacci retracements or something. Here's sugar kind of in that coil, still made another new low. I kind of like this, right? You can see the rhythm here from low to low. That's 9 to 10 bars. And this one's 9 bars from here, right? So again, the rhythm's in. I wouldn't be afraid to maybe click on an hourly chart and go with the direction of a buy on a buy area. However you trade, right? I would use a 2-bar indicator like Gann would do on an hourly, or something a little faster maybe. So just, or use an option, right? You can buy sugar options dirt cheap. Now we're trading March of 2027. I like that March contracts. I stay in March. They have a lot of volume. They don't catch the big dingers, but you also don't get hammered in the trades either. Here's the juice kind of caught in that decline. It had a chance and then fizzled out. We closed lower here for the moon period. Just, we get a couple closes at the same level and then down to a new level. So I assume that's the case. I'm expecting it to challenge this January move down here. Now we are in the spot. We are trading the spot. I have a hard time trading the spot chart on juice. I'd be scared of deliveries, but November doesn't have any activity. Here is. Okay, this is the Dees corn bar chart data, the free stuff. And again, we got down here. We talked about corn plopping out this low. So we do have the trap, right? We had the bull trap up here. Now we have a bear trap. I would have been buying this, and you still could buy it, right? Or if you want to wait for the 2-day trend line indicator, or at least a 1-day, right? Would be right here. We had 1 bar up, maybe 2. Let me see. 451.5. No, it matched the high. But again, if you're waiting and gonna have some patience, you could put a buy stop here at 452 and just play it that way. Or again, you could buy it here with maybe a put. If you're kind of neutral to bearish, you could buy it here with maybe 1 futures and 2 puts. All right, that kind of play. Now, if this is the pivot, that's a nice pivot. Again, that is, can't read it. That was 84 bars, 83 bars, and up, let's say 14%. So again, this would be the doubler, which would be around 568, not percentage-wise, right, but just the doubling of this range. So you're looking at around 570-ish, and the time frame is around September 8th. Just a simple format, similar to what we did on the Bitcoin. So again, I think quantity over quality makes sense on both those Bitcoin and corn here, right? You can buy now the money calls. This is December, so that'd be plenty. You buy all the money calls, maybe 520. Don't do any good if you don't make a high. Let's say you buy 5. Let's say you buy 6. You get out of 3 when you double your money plus commission, and then you keep 3. You keep 3 for down the road a bit. If the actual futures make a new high quickly, then you can scale out of the other ones for a pretty good profit and keep 1 to be a greedy SOB. Again, quantity over quality. It's a suck hole, so true gamble. It could get up to here though, and you could get out, of half of your positions just because of the volatility. Right? Here's the beans, and there's always reports too to cause some action. Trying to buy and all. Here's the soybeans. You can see we're still caught in that parallelness. And if you draw in the actual angles, that's 120. That's a good Gann number. 121. We're rounding, of course. And then this would be the other part of the parallel. So again, makes sense that was a low. I kind of liked it. I think you could buy it anywhere. You could even buy it down here and risk a little. No place to sell it really. So the only play is to play around to the long side with very low risk or options, that kind of thing. Let's go on. Here's the wheat. It did pop a new low, kind of broke out of this continuational pattern. Again, this was the zone, the Gann zone, the 6th matrix zone, had a trap. So, and now we did kind of have a small trap here. Of course, the logical trap would be down here. Didn't have to do that since we knocked that one out. The solar eclipses are down here for support. Again, as I mentioned in the past videos, I don't like buying wheat until we're halfway through all the harvest of the wheat. Here's the meal, popped a new low, but not a low low, just a chopper low. So not a bad buy, right? Again, there's no way to sell it. So just a putrid thing. I mean, it's definitely on the bottom side of its. Again, this thing trades out to 2020. Looks like there was some activity back in 2023, so it's definitely on the low side. You just got to assume it's going to trickle out lows and keep doing it over and over and over again. Here's the cough. We did have a dead cat bounce. We talked about that a little bit last video. Still caught in the in the in the down channel. Again, the parallel part even. So kind of nice low, right? I mean, if you're a picker, it wouldn't have been a bad. And if you did buy it down here, you almost got to sell it out here and not expect it to have some big gap and go. Now it could, right? I'm just saying the trend is definitely down. So you're true gambling here. Uh, the smart money. If you have multiple contracts, sure, you can get out of one or two. If you get out of half of them, right, and then play the other for a bigger bounce and then put a break-even stop in, that kind of thing. Here's the cotton, the bull. Only bull we really had besides silver and gold and I guess cattle. But you can see we're retraced down. This is the cotton, the Dees contract. Let's take a look at a spot real quick. That's a spot nearby just to see what it looks like. It kind of looks similar, right? I mean, the end result never gave you another opportunity to sell. So be a little careful. I'm not saying that's going to be the case, right? But it's proven it again here. It did have a secondary pop, and this one had a little secondary pop, but we're already past that. So the end result was a pretty good lick. Again, this is kind of out of our, it's too far to, and let's draw one more in for this one. We'll just draw it down to there. Two different, same color, but they're obviously far apart. And that's the target. Wow. Oof. Well, this first one's, or this quicker one's definitely in the target zone. And this one would definitely get down to this low. So it's definitely possible. Again, we got to have some finale. I don't know if you're a 5-wave guy or not, but you know, 1, 2, 3, 4, 5 makes sense that we could have one more plunder. Let's go to sugar again. Oh, that's the nearby. Let's go to daily. Again, that was our projections from the last video. Again, just a sad sack. It just keeps creeping. I like this. Buying these though, if you get some timing, you know, the cycles of that make sense a little bit. These from low to high to low to low to high. You can find some rhythmic trading and pretty cheap trading risks, right? Which is half the battle. Let's go to the spot nearby. Again, just a chopper on the juice.